morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at one of the more interesting transactions to come across the Trinidad and Tobago Stock Exchange in recent times. We're talking, of course, about Agostini Limited's pursuit of Prestige Holdings Limited. Now, both groups would have very similar ownership structures pre-transaction, and it's also anticipated that they will have very similar ownership structures post-transaction. Now, is it attractive for Prestige Holdings Limited investors or shareholders, and should they accept the offer? Well, let's take a look and look at some of the considerations that Prestige or PHL shareholders should be thinking about at this particular time. Now, in terms of the overall offer summary and details and key dates, well, the offer summary includes an all-equity offer to Prestige Holdings Limited or PHL shareholders, in which for every 4.8 PHL shares tendered, one Agostini share or AGL share will be received in that exchange. Now, there's a slight asterisk there for fractional shares where there's not exactly a 4.8 to 1 exchange. Those fractional or incremental shares will be cash settled. Now, in terms of some of the key dates, well, this offer would have opened just about 2 weeks ago on the 17th of June. The expected closing date is in about 3 weeks' time on the 21st of July. Settlement of Agostini shares, as well as that incremental cash payout for those fractional shares, are all expected to take place on the 31st of July. Now, post-transaction, it's expected that the PHL or Prestige Holdings Limited, with the exchange being effected, will be delisted from the Trinidad and Tobago Stock Exchange. Now, what could Agostini Holdings Limited look like from a market share structure, well, an ownership structure and a market capitalization structure post-transaction? Well, fairly similar to what it would have looked like on a pre-transaction basis. In fact, at the pre-transaction level, the top 10 shareholders of Agostini, based on their annual report, would have accounted for just about 86.5% of total shareholding ownership, whereas with respect to Prestige Holdings Limited, that top 10 shareholding would have accounted for just about 80%. On a post-transaction basis, assuming that 100% of the shares are acquired and exchanged, that share ownership structure in terms of the top 10 shareholders would decrease slightly for Agostini to just about 84%. Now, in terms of market capitalization, that's quite interesting. We can see that pre-transaction, that is before the offer was announced, Agostini had a market capitalization or total market value of just under $4.5 billion, with Prestige Holdings also at around $800 million. Now, post-transaction, with the accumulation or issuance of new shares and making some basic assumptions that Agostini is going to trade at around its existing market value, that market capitalization could increase to just about $5.3 billion, which actually puts it as in company of being larger than NCBFG, for example, at $4.88 billion, and sneaking up towards Massey and Antimacal, two of the larger conglomerates, at around 7.5 or 7.7 to 7.8 billion dollars respectively. So on a post-transaction basis, well, there seems to be some significant improvement in terms of that market capitalization, making for a much larger group and certainly a much more diversified group as well. Now, in terms of Prestige shareholder or Prestige Holdings Limited shareholder considerations, well, every investor's situation is unique, of course, but there are 3 things that we are looking at in particular with respect to this offer, and that is in exchanging your PHL shares for shares of AGL, there will be a change in cash flow characteristics of the particular stock, as well as the nature of investment returns that you might expect to generate over time. Of course, there's a change to business risk and profile and diversification, as well as potential market liquidity. Now, when we take a look at that cash flow consideration and in terms of and business return profile, we can see that post-transaction, Agostini is expected, based on fiscal 24 results for Agostini and PHL, to have earnings attributable to equity holders of around $309 million. And of course, that was based roughly on AGL's or Agostini's and Prestige's respective fiscal 24 results, with some adjustments for consolidation. Now, most interestingly for Prestige Holdings Limited shareholders, we can see that Post-transaction, AGL is expected to be able to pay a dividend based on those historical or trailing 12-month dividends of both Agostini Limited and PHL, of a dividend per share of just around $1.68 per share. Now, of course, there will be, or there should be potential synergy effects, etc. But just looking purely at the trailing 12-month dividends paid for both groups, that would peg the AGL shares post-transaction with the issuance of new shares, etc. At a dividend yield of about 2.6% in comparison to PHL, who pre-transaction would have been offering investors a dividend yield of about 4.7%. And that post-transaction dividend yield would be consistent with AGL's pre-transaction dividend yield of about 2.3%. Now, we spoke about the cash flow characteristics. What about the nature of investment returns? Well, when we take a look at AGL, they have been pursuing a fairly active pipeline of acquisitions over the past few years, and that would be reflected in terms of their growth in total assets, with a series of companies acquired strategically, of course, over the past few years, growing their balance sheet in terms of total assets from just about 2.95 billion to 4.59 billion at its most recently released financials, that is for the 6 months of fiscal 2025. And that really represents a roughly 55% increase in total assets. So certainly, in terms of the strategy for growth and value creation for investors, it's a bit different with respect to Agostini Limited compared to Prestige Holdings Limited, which is a pure play restaurant holding company. And finally, in terms of market turnover, well, PHL shareholders may be asking the question, or should be asking the question, well, will I be able to easily buy and sell these shares? And for that, we took a look at the market liquidity, or the liquidity or market turnover for each of Prestige Holdings Limited as well as Agostini Limited historically. And what we can see is in 2023 and 2024, Prestige Holdings Limited was just a bit more liquid than Agostini Limited, with a 2% market turnover for Prestige in that orangish color versus Agostini of 0.56% in 2023. A higher ratio or higher percentage is better in terms of liquidity. And in 2024, they were pretty much on the same pegging at 1.32% for Prestige and 0.91% for Agostini. Now, in terms of overall market liquidity, it should be stated that liquidity on the Trinidad and Tobago Stock Exchange isn't that great overall, and this is pretty much par for the course for both Agostini and PHL in terms of market turnover. So, is the deal attractive for PHL shareholders, and should they accept it? Well, again, investors' situations are particularly unique to them, and that decision, of course, will ultimately be for the investor. But in terms of some pros of the transaction and the offer or the proposed transaction, well, AGL's growth strategy is certainly one which offers a higher propensity for that longer-term growth through acquisition. There is a degree of built-in diversification, not just in terms of the business risk profile, but of course, in terms of AGL's regional expansion initiatives, where a lot of its expansion initiatives have been outside of Trinidad and Tobago. There is, of course, the potential for synergies, which would impact more efficiency in terms of, or improved efficiency in terms of cost management and perhaps revenue generation. And of course, there's a very healthy premium that would have been offered upfront in that exchange ratio for Agostini and Prestige Holdings shares, which would have equated to just over 25% prior to the offer being announced on or being made public. Of course, one consideration for PHL shareholders is, of course, that lower dividend yield, falling from 4.7 to, in our estimates, just about 2.5 to 2.6%. However, investor in PHL shares currently could, of course, accept the offer. Of course, if they held the shares pre-announcement, they would earn an upfront instantaneous premium of 25%, increase in the value of their shares, and they could always sell those shares of AGL, those newly acquired shares, onto the open market and generate that liquidity and reinvest it into something that might be perhaps a higher dividend yielding, or even into fixed income or alternative cash flow, higher cash flow instruments to their preference. So that's it for this week's edition. For more information, you can give us a call at 226-8773, email us at info@boursefinancial.com, and of course, you can check out all of our research, including this publication, at our website, bourseinvestment.com, and you can catch this article in the business section of today's Trinidad and Tobago Guardian newspaper. So until we meet again, Stay safe, happy investing, and we'll see you again on the Bourse Report.